With war all over the news, is one of the largest defense companies, Lockheed Martin, worth a further look? Well, let's find out and put it through the Pulse framework, which I've been using professionally for over a decade. I'm going to switch to the Excel view here, and let's put in the ticker. This is the Pulse template, and we're going to put LMT, which is the ticker for Lockheed Martin, and take a look at it together. Let's give it a second to load. And here we have the data. So the Pulse framework starts with economic profits, which is the P. And here you can see that the economic profits are pretty incredible. In a positive, they're rising, although they did drop over here. Perhaps there was an acquisition or something else going on, because you can see invested capital take a step up as well. I would say very excellent results right here. Looking at the U, the underlying free cash flow, again, beautiful chart. Free cash flow is positive, it's rising, and the free cash flow conversion is around 90%. So perfect. Switching to the L, the leverage, around 2.5 times. That's very reasonable. I'll say maybe even slightly under levered. So I would say we're in good shape. Nothing to worry about here from my perspective. Now let's take a look at the two valuation metrics: the S, which is smooth free cash flow yield, and the E, the EV cap rate. So for the S, the smooth free cash flow yield, 5%. It's okay. It's kind of, think of it as being a 20 times free cash flow. It's not particularly low. It's not super high. It's not exactly interesting in my mind. And then looking at the EV cap rate, which looks at more current metrics, the last 12 months, and uses the income statement rather than the cash flow statements, 4%, that's not cheap. I would say that reflects fairly high expectations. So if I were to summarize, you got excellent economic profits, you got excellent free cash flows, decent balance sheet, no problems there, but the valuation metrics are just not interesting enough for me right now. So where that puts it is in that second category of a company that's a good company that I would be interested in coming back and looking at it again when the price is lower. If you want to do this yourself, feel free to grab the Pulse template. Link is in the description, and I'll see you in the next video.